Alrighty, so in this section, I will be talking about and showing you guys how you can read these candlesticks properly and why you should be waiting for these candle closures, because that is extremely important when it comes to trading. Now, this is basically the very basics of reading price action. We don't want to be actually trading with any indicators. We purely only want to be trading based on pure price action. And the reason why is, first of all, indicators are all lagging, which means that all these indicators, EMA, VWAP, all these indicators are behind price action. So these candles are showing you what is happening ahead of time before these indicators even show you anything. So that's why I really want to base all of our trading ideas and analysis based on this price action of viewing these candles. Hence why being able to read these candlesticks is extremely important to learning how price moves. So I'm just going to pick a non-volatile pair real quick, just like SPY. So this is probably easier for you guys to see. And let's just pick something here. Let's pick something like right here, all right? So to read these candlesticks, pretty much this candlestick, as you guys know, depending on the colors you guys pick, this is considered a bullish candlestick. These candlesticks going down are considered bearish candlesticks. So there's only two types of candlesticks that we know of. Now, there are charts you can go online and actually just look at the types of names for these candlesticks. Personally, I don't really care much about the name. You just want to know how they open. Okay, so basically, let me just write this down actually. It's probably better. The two or three main things you want to focus on is the open of the candle, the body of the candle, and then the close of the candle. These are the three most crucial things when it comes to reading candlesticks. These will tell you basically the story of these candlesticks and how they're forming. So first of all, the opening of the candle. All right, all these candlesticks open based upon the previous candle. So this candle right here, let's actually, you know what, let's go on replay mode real quick. This probably is going to help you guys a lot. And oh, one more thing before about these candlesticks is, if you guys haven't realized, these time frames each represent a single candlestick. So if I'm on a 5-minute time frame, that means this candlestick, so this is 10:10 a.m. This candlestick was developed from 10:10 a.m. to 10:15 a.m. This is a 5-minute price action candlestick. So this price developed within 5 minutes. All these candles are 5-minute candles. If I go into 1 minute, each candle will be 1 minute, meaning you will see a lot more noise, a lot more candles forming in the same time span. Vice versa, if you go into 1 hour, 30 minute, 4 hour, each candlestick represents a different interval of time. So that is something you actually really want to keep into consideration when you're analyzing your trades. Nonetheless, let's start this out real quick. So this is, all right, so I'm going to start out with this, first of all, this bearish candlestick right here, 5-minute bearish candlestick, okay? That's the first thing you want to identify. This is a bearish candlestick going down. Now, next thing you want to do is, first, you identify the open of the candle. Well, the open of this candle is going to be where the previous candle closed. So when I say close is essentially based on the body. So you want to see where the body of the candle is. That would tell you where the previous candle closed. So this candle right here, the body ends right here. These two parts of the candle. So what makes up a candle is wicks and bodies, okay? This right here is considered a body. This solid area right here is considered a body. I think I have magnet mode on, that's why. But this right here is considered a body. Let me try removing magnet mode. Okay, anyway. Let's see if we can fix this real quick. Okay, no, that's not helping. Okay, so this right here is the body of a candle. This right here is the body of a candle. Something wrong with my drawing tool. What the heck? Hold on, give me a second. Let's see. Okay, that is not helping at all. No. Okay, but anyway, that's the body of the candle. And these lines right here are what we call wicks. So two different things you want to differentiate between that are extremely important. You can Google online for images of how these candles are defined. But the main parts are the body and the wick. These are the main things we want to focus on. The body close is, so on a bearish candle, the body close is the lowest point of the body. So the body closed here. This means the next candle is going to start opening up at this level. So the next candle, whether it's bearish or bullish, will either open up or open down. That would be the candle, for example. The candle body will start from here, and depending on how it closes, And price action within this will depend on what the candle looks like. So that's the gist of it. That's the body. That will be the close of the body, which is the bottom of a bearish candle. The open of a body will be basically the top of a bearish candle. Vice versa for a bullish candle. So for this bullish candle, we will be opening up here on the bottom of the body, while we close on the top point of the body. For a bearish candle, it's the opposite. We open on the top of the body and we close on the bottom of the body. Now, these body closes are extremely important, as well as reading and understanding these wicks. Now that we know where the open of the candle is, the body of the candle, and the close of the candle, we want to look at these wicks. So these wicks tell us that price previously has gone to this point. Price previously has touched this level right here. But price decided to reject this level and close above this level. What this shows is these wicks mainly show us support and resistance. Where is resistance? Where is support? So if we could draw a little line right here, this is essentially support right here. Every time price has touched this level or trend, it has gone up and is closed above. That means we have very strong buyers at this level. They're defending this candle. So that's what wicks tell us. Again, if you look at this right here, these two wicks right here, this is not enough information for us to make a trading decision on, but something you want to just be able to read in general. These two wicks tell us that price has rejected this level twice. So this level right here has been rejected twice by these two candles, meaning there's strong selling momentum and strong selling there. Again, that's just on the lower time frame, which we don't want to focus too much on. 1 minute candles really do not matter. I would say the main things that matter is the higher time frame candles, like 5 minute or above. And these have to be candles that are near key levels of interest, which I'll talk later into. But that's the gist of how you read these candlesticks. So if we move on to the next candle, as you guys can see, where we closed previously on the bearish candle, that's where we open on the bullish candle. And now where is the body close of this bullish candle? Well, the close would be the top of the body. The price has reached a high of here, rejecting this level that we saw previously again. So this is a very strong resistance level, I would say, for now. That at some point we have to either break through or reject and go to the downside. So these wicks again tell us support and resistance, while these bodies tell us where price is closing, which is very important for key levels. And later on, you guys will get more familiar with reading these candles. In the beginning, I know it's quite difficult and not as easy to fully understand as beginners. That was me when I started out. That was everyone when they start out. But over, I would say, even a month, you'll get very used to reading these candles very easily. So let's look at what happens to the next candle. Next candle, we broke through this level, but we actually have not technically, because this is a pure example of what I'm talking about. This level right here that we rejected twice the past 5 minutes, we have not actually broken through this level. The reason why? Because the body closed below this level. Every trader is looking at the close of the body. Okay, the close of the body is extremely important. More important than the open of the body. The close of the body is extremely important. We closed below this level, meaning we have not fully had a breakout. We have not fully broken out of this level yet. We just wicked into this level, and this is what this tells me here is we wicked above this level. Price at some point, if once you see this live, it will be so much easier to understand. But price has reached this point at some point with the full body, and then sellers decide to take it down. So now we are back below that level. But at some point, we again have to either break through or fully reject. So let's see what happens in the next candle. Next candle, this is considered a full-on breakout of this level. We have had a body closure above, actually extremely bullish above this level. So we have broken out of this level. So that is how the basics of how you read these candlestick patterns. As you get more familiar, it becomes a lot more it becomes a lot more natural. So two main things you want to focus on is obviously the close of the candle and the body of the candle. But one last thing you also want to focus on is obviously the wicks, how big these wicks are. Wicks like these are extremely important. So if you see candles like this is considered what I call a reversal candlestick. Now, this doesn't work and happen all the time, but this is definitely a key thing that you want to look at if it is at a key area. Look at this. Let's draw this level of support right here. We have support around this area right here. If you can even draw a box here, we have support right here. And let's see what happens here. Well, what happens here clearly is that price tried to reach support and it clearly rejected with this candle. when you see long wicks like this is showing you extreme strong price action. This is very crucial, and we must focus on candles that are very abnormal like these. These normal candles that look like this with the average size body and wicks, they don't matter as much, I would say, as these candles that are extreme like this. This shows that price still has momentum and a lot of buyers right here at this moment again. Until price breaks below this area, buyers are in control. Same with this situation here. What happens is we have strong resistance or strong support, first confluence, second confluence. We have this candle here that wicked and touched it and closed way above where it touched. What this means is price at some point, the body was fully down here, and then buyers bought up this candle, pushing it all the way back up here and closing above. Especially because this is on the 5-minute, it holds a lot more power than a 1-minute candle. So this shows us that most likely high confluence that price is gonna go up because of the close of this candle. This candle really shows us that. So we can even enter off of this candle once we have a few confluences in mind. Double confluence, we can enter off this candle, and we are expecting price to push up. That is what happened exactly to price. So you want to be careful and read many confluences before you do enter a trade. That is what is extremely important when you're trading. So now let's continue playing price right here. As you guys can see here, another thing is, look at this candle. This is another candle that stands out to me. This is another reversal candle right here. This candle at some point has reached above this level, but sellers brought it down significantly. Now, this level is roughly around this area. I like to keep it more so as an area rather than a specific level because price, in my opinion, is not binary. There's no exact specific level. This area right here, there's tons of sellers. We tapped into this zone area of sellers and we rejected really hard. What this tells me is that price at some point should be going down very soon. But this is not enough confluence, and this does not tell me that price is gonna go down from here. This candle is not enough price action to tell me that I should enter right here, right? We need more confluence, things like that of that nature. So as you can see, price eventually does form and come back down, but not until a few more moves up. This up move is towards usually based on buyers still trying to break through. This is like a wall right here. Pretend it's like a wall of sellers. Buyers are trying to break through this wall so they can push price even further up. The problem with this is that because you guys can see sellers still overpower this area, buyers and sellers were getting filled, and there's way more sell volume here. So sellers took control and pushed price down. And look at that strong, nice push down. Reading these candlesticks will truly make a big difference in your trading. And in fact, you can even potentially buy in this area because we have seen double taps right here where there's a lot of strong buying power and pressure. So let's see what happens here. That is actually the end of the day. But as you guys can see, that's essentially how price moves and how price works. So again, focus on the close of the candle, the wicks of the candle, and how price is reacting based on these candlesticks. That is what is going to be truly transforming in your trading. And again, this is just the basics, fundamental, technical aspects of trading. And there's a lot more that goes into trading than reading these candlesticks, but that is the first step to achieving profitability.